Welcome, everybody, to what will be episode 210 on the Customer Experience, Customer Centricity YouTube channel. I, as always, am your host, Debbie Levitt from Delta CX. And before we get too far, as always, I like to thank our Patreon members. We've had a huge influx of new members, both free and paid. So thank you to everybody who's joining the community. Whether it's free or paid, you can check out our Patreon at patreon.com/CXCC. Paid people get some early stuff and extra perks. Ultimately, everybody gets everything. So let's jump right in today. We have such an exciting topic and a super guest. Thanks to Michelle for introducing us to our guest, Dan Lavinder. And we're going to be talking about finances for freelancers and contractors and solopreneurs. And we just want to mention that while Dan is licensed in America as an accountant, and he'll tell you more about that, we're going to try to give you some generic advice since we know not everybody watching now or later is in America. And also just a reminder that none of this is accounting or legal advice. Please make sure you see an accountant or lawyer in your region for advice directly for your situation. Disclaimer. Okay, so Dan, over to you. Tell us all about you.
Hey, well, good morning, Debbie. And again, thank you for the invitation. And I really look forward to getting to know some of the other people in your community this morning. So as you mentioned, I'm Daniel Lavender. I'm the owner of Guardian Solutions, where our values are to grow, serve, and enjoy. We grow people, businesses, and communities. We serve with gratitude, and we enjoy the fruits of our labor. I am a licensed CPA in Virginia, which allows me to do tax and accounting in any state. In fact, I have even filed multi-state returns for a few people. I live in Williamsburg, Virginia with my family of 7. And I like to always tell small business owners, let's focus on profitability first, client satisfaction second, and compliance third. We always have to focus on fixing profitability issues before we can ever have a tax problem. So as always, the best way to know whether or not you're profitable is through good bookkeeping, whether it's done by you or whether it's outsourced. Thanks.
Groovy. And I think all three of those are important, though, you know, the order is up to you. So one of the first things I wanted to talk about with you was, we talked about this in some of our pre-show adventures, was you have an interesting way to help people calculate what might be the right rate or a daily or hourly rate of pay for them. Because we get a lot of questions sometimes in our community of, other than what's the market rate, how much should I be charging so that I can pay the expenses I need to or have the savings I want to have? So you were telling me you have an interesting way to help people calculate that.
Yeah, I do. So I think when I work with young small business owners or even maybe more experienced, I think it's always really important to figure out where you should set your hourly rate. So if the guest on the show would like to maybe grab a pen and paper, I'll go through a quick formula of how you can calculate where your hourly rate should be set.
Okay, go for it.
So the first thing you need to do is think about your personal expenses and what you need for your monthly income. So, you know, perhaps maybe that's $4,000, $5,000, $6,000, something along those lines. But in my example today, I'm going to use $4,000. All right, so that's what I need to bring home to actually pay my bills. And then from there, you would want to calculate how much you anticipate spending on things like retirement and health insurance, the benefits that an employer would typically give you. So in my example, let's budget at $1,000 for that. So that's $4,000 plus $1,000, and that gives us a total of $5,000. Now, once we have that, a typical solopreneur or a young, single business owner should anticipate a profit margin of about 50%. So if you take the $5,000 and if you take the $5,000 and you divide that by 50%, you'll get $10,000 in my example. And that's the amount of monthly business revenue that you need to bring in so that you can ultimately get that $4,000 to pay your bills and your utilities or your personal expenses. Now, again, this is in my example, your figures may be different. Now, every business owner should really think about how many hours they want to work. Some, they may want a more lifestyle business where that's maybe 30 hours, and maybe other people really enjoy the work they do, and that might be higher, 60 or 70 hours. But in our example, we'll just use a simple 40-hour work week. Now, what's important to remember is of that 40 hours, only about 65 of it is usually dedicated to billable type work. Because remember, now that you're a business owner, you've got other administrative things you have to take care of. You've got to draw up proposals. You may have to do some of the bookkeeping. You might have to do email correspondence. And typically those things aren't billed to the client. Even if you don't bill on an hourly rate, you need to account for that work. So we'll take the 40 hours, we'll multiply it times 65% to get the number of actual billable hours we can work, which would leave us with 26 hours. Now we have a pretty simple math equation where we'll just assume that there's 4 weeks in a month. We'll take the 26 hours that we're working each week, we'll multiply that times 4, and that'll give us 104 hours that we're working each month. Now let's go back up into the third step where we came up with the total revenue per month, which in this example was 10,000. We'll divide that by 104 hours that we're working each month to bill clients, and we need to basically calculate about $96 per hour in that example. Now, that's how I did it. Certainly your numbers will vary. However, this is a pretty simple formula that you'd be surprised how many business owners have not even taken into consideration.
Yeah, thanks for that. It's interesting. Now, of course, it's a reminder that this doesn't mean that you can make 96, depending upon who you are and what you do and at what level you're doing it. And depending upon those things, you might even be able to make more than that. This is really just kind of the math of based on the way you're trying to work, and remembering that you're no longer going to have an employer paying for some of your stuff. What do you need to live on? And I wonder if you should add into that extra buffers, like a savings buffer. I always think people need to have like 6 months of expenses put away in the bank in case of bad times like we have now.
Yeah, so I think my response to that would be one of the other formulas that I'll often work with my business owners with is, how should we break down the revenue that comes into the business? So going back to our previous example, if you have $10,000 of revenue, a good way to allocate that out would be 50% is what you would pay yourself, right? So 5,000 would be coming to you. You'd use that again to cover your personal expenses, utilities, bills, things like that. And then 30% of what you earn should really be allocated to business expenses. One of the things that can be really challenging is you have so many problems coming at you as a young business owner. You have so many of these challenges, and there's always someone out there willing to sell you a solution. So you really need to budget early on for which solutions you will actually pay for and which ones you may have to solve on your own. And so I recommend about 30% to that. And then take about 15% of that revenue and set that aside to prepare for paying any sort of taxes associated with the business. And then that leaves 5%. And that 5% is where you would really want to start saving up for some emergencies, both for maybe personal reasons and for the business.
Yeah, great. Thanks for reminding us about those savings and the emergencies, which I think this has been everybody's emergency year. I also wanted to ask you about something that came up for one of our community members. This person had created an LLC in one state and then recently moved to another state in America. And they weren't too sure if they had to close the LLC, open it up again, re-domesticate it, pay in 2 states. I understand you might not be familiar with their exact situation, but can you give us a little bit of an idea of what happens to a business we might create if we move states?
Yeah, so I'll give the best advice I can as an accountant. So there's, whenever you create an LLC, I like to always distinguish for clients that that's really a legal entity. And so some of the liabilities associated with that would best be answered by a lawyer. Now, the taxability and the accounting for that entity, that's where I primarily specialize in. But what I will say is that when you create an LLC, you have the ability to either operate that as a single member LLC where it's still mostly you, or you have the ability to turn that LLC into its own entity and corporation. And so generally you create an LLC and then you would register with a state corporation commission. And it's best, because you likely are subject to some sort of state income tax, it's usually best to have that LLC registered in the state that you live in, and also to generally be created in the state that you live in, because it creates a lot of symbiotic relationship between the legal perspective and the accounting and tax perspective. So my recommendation would be, if you had an LLC, you created it in a state, then you moved to a different state. You may not have to create a new LLC, but you'll certainly need to register that LLC with the new state that you moved to.
Great. Thanks so much for that. I'll make sure to pass this video to our moving friend from our community. I also wanted to ask a little bit about, I want to ask about creating a business entity. Some people who are freelancers or contractors, they're just paid directly as Debbie Levitt, or let's point at Michelle Keller here today. And then some people have some sort of company or business, whether it's an LLC or S Corp or C Corp, or they're from another country. Like here in Italy, I also have what's called an SRL, which is basically Italy's version of an LLC. So I know some of this is a good conversation for a lawyer, but from an accounting perspective, can you think of a couple of advantages or disadvantages to a company paying your company rather than you personally?
Sure. So I think the first thing is, I like to talk a little bit about the progression of a business. So most people in a space like professional services, they have the opportunity to go out and get a side hustle. And so oftentimes they'll get contract work, and they'll give that money specifically to, you, Debbie Levitt, or me, Daniel Lavender, or as you mentioned, Michelle Keller. And then after a while, you're like, okay, well, I actually want to start keeping track of my business expenses. So I like to encourage everybody, if you think you're going to do a business, it's always advantageous to open up a separate account for those business transactions. It just makes things easier. Now, if you don't create an LLC, and I know we'll get there, but there's nothing that stops you from setting up a separate account and then using that to track all of your business expenses, even if maybe you're just doing some part-time, side hustle work. Now, once you form the LLC, really nothing has changed for you. You're now considered a single member LLC, or what's called a disregarded entity. And the taxability on that is often the same. And the two major taxes in the United States that we pay are self-employment tax, which is your Social Security and your Medicare, and then your federal income tax. So the next thing that a lot of people enjoy doing is they'll create that actual LLC, they'll turn it into its own entity, like an S corporation or a C corporation. And the tax advantage to that is you can then become an employee of that entity. And by becoming an employee of that entity, now you can pay the self-employment tax, the Social Security, and the Medicare on what you pay yourself as a reasonable wage. And the rest of the income from the business, so you say, hey, my business, I made $150,000 this year, but a UX designer doing the type of work I did would typically be compensated $75,000. Well, now you can pay self-employment tax on the $75,000, but the other $75,000, which is part of the business income, now you don't have to pay self-employment, only federal income tax. And so that's the tax advantage that a lot of people will go through and create a corporation. It also looks like we might have a question.
We do. A friend of the show, Amy, asks, can you talk about the $1,000 example you gave earlier for health insurance and retirement money? How did you arrive at that number?
Yeah, so to be completely honest, I really just used it to make a round number for the example that would be easy to follow. So it'd be hard for me to say. Health insurance is really variable depending upon your family situation, whether or not, it's you and several kids. You may also find that there's different types of health insurance plans. Some have higher deductibles than others. So I'm estimating that you would save about $500 for health insurance, and that you would probably save about $500 per month towards some type of retirement plan. Those are not best for everybody, mostly just for example purposes.
Yeah, that's a great point, because some people might be on a spouse's health insurance and maybe that's taken care of in some way. Some people might have to pay for that out of their own pocket. Before I moved away from America, I think I was paying out of pocket because I was mostly freelancer slash contractor. And I think I was paying $500 a month for health insurance for one person, just
Correct.
me, because my family situation was just me. And so, in that case, I would have to, estimate things the way that you were talking about. Like, wow, that's 500 out the window right there just for the insurance, let alone anything I wanted to put into savings or retirement or other things.
Yeah, and kind of along those lines, businesses really, large corporations really like to provide benefits because those benefits come to you tax-free, and they still write them off as a business expense because they are giving you compensation. And so a lot of people don't realize the actual value of the benefits they get with larger corporations.
Let's also think about, we might have some people here today, and certainly some people in our community who are not from America, not living in America, not American citizens, not paying taxes in America, but might be offered a job, or we could say a freelance or contracting job from an American company, whether a small startup or a larger American company. What should some of our international friends take into consideration when doing business with an American company as a contractor?
Yeah, so I haven't specifically dealt with this particular issue, but I think the best general advice I would give is, speak with whoever works in the HR department at that company that you're at, and ask them how they're going to be doing your tax withholdings. So generally, they'll either a large international corporation will be responsible for paying taxes potentially in multiple countries. So you'll want to see, are they withholding taxes and actually holding that to the United States government, or maybe they're withholding those taxes and sending those into. But I have seen that not on the international scale, but on the state scale. I've seen this before, where a corporation operates in one state, let's say Arizona, but I'm doing work out of Virginia where I'm located. And oftentimes the company is set up to automatically take those withholdings and send them to like the state of Arizona. Well, now I have to do my tax return and I need to file in Virginia, and none of the withholdings have been sent to Virginia. So I would say my best piece of advice is check with the HR of the company, take a very close look at your payroll stubs and see where that company's withholdings are going. And so that you can make sure, because ultimately you really only want to pay that income tax to one entity, whether that be the United States or whether that be the home country that you're located in.
Yeah, great. Have those conversations. And again, get an accountant involved so that they can guide you. We have a super question from Elizabeth. Elizabeth says, when do you think would be the best time to create an LLC? For example, in California, we have franchise tax on the LLC, even if operating at a loss. I think, is that the $800 a year I used to pay, Elizabeth? Is that the franchise tax you mean? Yes. Okay, so in California, it's $800 a year to keep your LLC open, even if it's operating at a loss. So Elizabeth's question is, would it make sense to create it after doing work as a DBA for a while? What if you don't make income during certain seasons?
Yeah, so there's kind of 2 or 3 questions here. So I'll try to break it down. I'll take a pause and then we'll come back at it. So I think the first question is, when is best to create an LLC? So going back to the earlier example that I talked about, remember that creating an LLC really is primarily for legal purposes. So you now separate your assets from the business assets. And so it provides you some protection from your personal, whether it be your home or your car, subject to lawsuits. Now, aside from the legal aspect, once you set up an LLC, you now have a separate entity. And so now you can choose some tax elections for that. As a general rule of thumb, I would say that from a tax perspective, generally, if your income is greater than $40,000, that's when we usually advise business owners to start considering an S corporation. And so at that point, you absolutely have to have an LLC set up.
Yeah, I wanted to quickly tell my story there. When I started my company in 1995, I started as what we call a DBA, which is Debbie Levitt doing business as, fake company name, but it's really all just my personal tax return. So that's DBA. But After 4 years, I was starting to get some serious clients. I was starting to really get somewhere with that work. This was the late 90s. And I had a family of all lawyers, and they said, you know what, we think you need to start a corporation because you're starting to deal with some larger amounts of money and some more famous companies, and you just need that liability umbrella. But I also recognize, looking back, if that was the criteria, I probably should have done that in my first or second year, because we started getting some big clients in our second year. So I think I started mine late.
Yeah, and I think I would, further just say it never hurts to have an LLC. It's really, now maybe there are some tax considerations for that in California with the franchise tax. But again, if you think you're going to grow a business, it really doesn't hurt to create that LLC, get that second bank account, register with the IRS, and then you can kind of really start to look at your business entity and how it's performing.
Yep, I totally recommend it. I've had my corporation now since 1999, and I think it's been a great way to do things. So I do recommend it. But I didn't start with an LLC, but you certainly can. I started with one here in Italy. I have the Italian version of the LLC. And again, if you're watching live, please ask your questions. We're happy to take them. If you're watching this video later, leave your questions under YouTube. And if I can't answer them, I'll send them over to Daniel. Let's see. I'm trying to think of a couple of other things we were going to talk about. Let's talk a little bit. Oh, Ana Lucia is here. Maybe a bit off topic. There's one thing that may help me work for another country, which as employers of record. I'm not quite sure how that could work. Is it suggested by the company or the possible contractor? From what I've understood, if we use those, we don't have to set up a company or work as an independent contractor. I'm not sure. Do you mean, like, Ana Lucia, just to make sure I understand you, do you mean, for example, someone wants to work with you as a contractor, but you don't have a company, so you say that Delta CX is the employer of record, my company makes you a contractor, and then the company hires my company? Does that sound right? Or Daniel, are you familiar with the term she's using, employer of record?
Yeah, so I have not specifically heard of that term. I do have a client that's a travel agent, and she had talked about independent contractors that help her set up travel arrangements. And as I was trying to get a better understanding of the situation, she's actually using a third-party service. So she's not paying those independent contractors directly as I originally assumed. Rather, she's using a third-party agency. So this may be something where this person may be, yeah, so it sounds like basically an offshoring type company where rather than you having to maybe set up the HR payroll aspects of it, you use this third-party company to basically facilitate the transaction for you.
Yeah, thanks for bringing that up, Ana Lucia. I wanted to mention, and this is not totally out of the bag yet, but Delta CX might go in that direction of offering this service to people, especially from our community, who are looking for some help in getting hired by other companies, and we can be that American C corporation in the middle. So stay tuned to the Delta CX website for more about that. But yes, so from what I understand there, Ana Lucia, like hypothetically, you would work for us and we would have to do all the appropriate paperwork and things for you to be a contractor for us or for whoever is that middle person or intermediary. And then the company has to hire that company. Not every company will go for that, because then we have to be put in as a vendor. So sometimes there's complexities there, but I do think that that's a future way to go. And I just wrote an article about how I think we need to see more of these services, especially as companies are saying things like, and maybe Daniel, you can comment on this as well. I actually had a company want to hire me recently, and they said, well, we're in Ohio and we'll only hire people in Ohio. Can you like magically produce an Ohio mailing address? And my thought was, I don't like the sound of this. That might mess up, I don't know, my voter registration, or I don't know what. What should or shouldn't we do? I know you're not going to give legal advice, but do you have some tips on what we should or shouldn't do if a company wants us to magically produce a mailing address in their region?
Yeah, so I don't know for sure, but I suspect that what that company's trying to do is they probably have some sort of a tax advantage, whether it be a credit or some sort of a refund that they're eligible for by employing a vendor that's in the state that they live in or that they're operating out of. So in that particular case, I'd probably follow up with the employer, and depending on how lucrative, I think understand that there's going to be a cost associated with doing that. And so I think you'd really have to just look at, is the work lucrative enough? If it was a small, maybe a couple $100 project, I probably wouldn't bother with it. If, maybe this was, a 12-month project where there were several $1,000s at stake, I might explore whether or not it'd be worth creating a separate entity to operate from in that state that's being requested. Do I think they're doing anything illegal there? No, I don't think they're doing anything, legally questionable. But they are probably trying to take advantage of a tax credit.
That makes sense. Thanks so much. So you're saying hypothetically, I could have opened an LLC in Ohio and said, ta-da, here's an Ohio business you can hire.
Yeah, and you could have done that. I think the reality, though, is there's probably two parts that Ohio is going to be looking for. In this particular example, again, hypothetically, they're probably looking for them to employ an Ohio corporation, and then Ohio is probably looking to get tax revenue from that little corporation that you created. So if you don't live there and you're going to pay state income tax somewhere else, you may not actually fully allow that company to qualify for the credit anyway. So again, on large projects, I'd probably do a little more investigation. On smaller projects, I'd probably pass and find different work.
Yeah, I pass. Okay, thank you for that. Now we have a great question from Sirocco that was seconded and enhanced by Melanie. So let me read these out loud. Sirocco said, what's the best way to keep track of your income and quarterly tax payments? And Melanie said, I second this question. I also need a better understanding of how that process works as a 1099 contractor who did maybe 3 to 6 months of contract work during a calendar year.
Yeah, so again, I apologize if I sound like a broken record, right? But I think as always, the best way to start figuring these things out is to have a separate account. Whether that just be a separate personal account or an actual LLC with its own, EIN, employee identification number, with its own bank account. And then you can really start to see the revenue and the expenses and ultimately the profitability of the business. Then from there, you have the opportunity where you can compute that on a quarterly basis, and based upon that profitability, you can make an estimated tax payment each quarter. Now, I always advise my clients, we may not necessarily want to make an estimated tax payment. So I always, advise, hey, if you need to pay your bills, pay your bills. And the general rule of thumb I say is, specific to the US, this may not apply internationally. But at worst case, if you don't make a quarterly tax payment, you're subject to a penalty. And that penalty is generally around the interest rate of 5%. And I hear it now with new higher interest rates, it's closer to 8%. So if I had a client and they thought they could pay off a credit card early at 25%, then I would probably advise them to do that rather than make the tax payment. Or if they need, if they said, well, I don't have enough money, I'm going to have to, put some bills on a credit card, I'd probably recommend just, not making the tax payment and just paying the penalty at the end. Now, that's specific to each client. Some clients have different risk levels. I usually try to dial that in with the specific risk tolerance of the client. But do understand, making the tax payment, you're going to save yourself about 8%. And so if you have a better investment, then maybe you would not do the tax payment, or maybe you need to save the cash for something else. Then that's about the cost of not making the tax payment.
Yeah, and remember, even if you don't make that quarterly tax payment, you will owe the tax, and you'll just owe it at the end of the year when you do your taxes. So just
100% true.
Yes, a quick note there. Just because you didn't make the payment doesn't mean you get out of paying it. And then I also want to comment on keeping track of income. So I'm still using QuickBooks Online. Definitely hashtag not sponsored. I don't know why I'm still with them, but I guess probably because I've been using QuickBooks since 1995 and I just haven't wrangled my way out of it yet. But I think any sort of accounting system that you can use, Sirocco, Melanie, anybody else. And what I do is it interacts with my bank account. It shows me all of the money that I've brought in and that I've spent, and then I can go in and categorize that. So I can say, okay, I made this money because of this, and I spent this money on these particular expense categories. If you've ever done any sort of businessy taxes or Schedule C stuff in America, you'll see there are categories of write-offs, and so it'll say like, how much did you spend on this particular category? And so you need that total at the end of the year. So I just make sure that I know every penny that's come in, every penny that I've spent, and how to best categorize it so that when I'm doing my taxes, I happen to do my own taxes for better or worse, I know how much I've spent on those categories. But again, QuickBooks is not the end all and be all. Dan, do you have anybody you recommend for kind of an online account?
Well, to be completely honest, I think small business owners keeping track of it, this is an extra task that can be usually not particularly pleasurable for a lot of business owners. So they're usually not jumping to go do their bookkeeping. Even as an accountant, I struggle to do the bookkeeping for my own business, right? Because I'm busy doing the work of helping other clients. So I think if you can reduce the friction to your bookkeeping through a program like QuickBooks, it's well worth the investment. The other popular product out there is called Xero. That's Xero. I would say that Xero and QuickBooks are the two industry leaders. But if for some reason you have very small expenditures, which a lot of your followers may be in that category, don't be afraid to just track it on an Excel spreadsheet. There's nothing wrong with doing that. If you can set that up and you do it on a regular basis. But QuickBooks and Xero, you mentioned the bank feed, that has really made bookkeeping a lot easier. And so if you can use one of those programs to do your bookkeeping, there'll certainly be a huge advantage. And if you think about it, if an hour of your time is worth about $96 to be made, you're going to save well over that hour by paying the $35 to $40 getting QuickBooks.
Yeah, that is a great reminder. When we think about the value of our time and what we're charging for our time, there are sometimes things that I either say no to, or there are services I use or people I hire where sometimes they go, oh man, that's going to cost me $600 for a year. And I go, okay, but if I were billing 96 an hour as Dan's example, I only have to save about 6 hours for the entire year for me to feel like this was worth it to get some of my time back or life back or whatever it may be. So, and of course, these decisions are easier when you have more than $600 coming in and you feel like you have that money available to you. I'm going to see if there's any last questions in today's live show. Oh, we do have one. Okay, we have Elizabeth, and then we'll try to wind down. I warned Dan this may not be a half-hour show. We have great guests and great people joining with good questions. So Elizabeth also asks, I have another question about expenses. What about write-offs? What types of expenses can we deduct as a new freelancer? Aside from rent, supplies, etc., are there expenses we should invest in that are considered good write-offs? I know you probably can't list all of them, but can we help out Elizabeth a little here?
Yeah, so I'll go back to a couple of my key points. So the first one that I find a lot of business owners can get confused by is if you don't need to buy something, don't buy it. Profitability is always better than a tax write-off. And then the next thing we want to do is start looking for those things that are common expenses, and we certainly want to account for those. So some things that I'll give you a quick list. So any marketing materials you create, maintaining a website, getting a graphic designer to create a logo, any commissions, if you use any payment processing, those little pieces, the 2% or the 1%, those things are written off. If you have any sort of insurance associated with the business, let's say you do get a small credit card for the business and you do rack up a little bit of debt on that. The interest on those credit cards associated with the business would be written off. Any legal or professional fees, your bookkeeping, if you hired an accountant, or tax return preparation, if you had a lawyer set something up for you, that's also a business expense. And then I think the two other things I'd really like to focus on is I recommend office expenses be split into hardware and software. I think it's really important to kind of understand how much you're spending on things like your computer, maybe webcams, microphones, whatever that might be, versus the software that you're spending. So I have all my clients split this out, because in this world, I'm seeing a lot of clients spending more and more money, particularly in the professional services realm, for software that can get pricey. The second thing I really want to focus in on is taxes and licenses. So you want to make sure that your personal taxes is not a business write-off, but like registration fees, the franchise tax, those might actually be a tax write-off for you. And then travel. So if you're going to go to a conference out there, conference can be a great opportunity to have a travel business expense, any sort of educational programs and things like that.
Yeah, and I want to mention this is where an accountant is really important, or I do my taxes with TurboTax, hashtag not sponsored. I don't necessarily recommend them, pros and cons. But one thing I do like about it is, let's say I happen to have spent a lot in a particular category for the year. When I go to do my taxes, it will sometimes say to me like, whoa, you just spent too much in this area, and we don't recommend that you try to write off all of this. This can look a little bit strange that you brought in, let's just make up some round numbers. You brought in $100,000 and you spent $30,000 in a particular category for the year. We at TurboTax, is a little knowledge design for those of you fans of Larry Marine. We at TurboTax know that if you try to write off $30,000, $50,000 in this one particular category, that looks weird to the IRS. They might have some questions for you, and we recommend that you write off less than that. And I think, and that's fair. Yes, it means I'm going to pay more in income taxes because I don't have as many write-offs, but I'd rather pay some taxes and not look weird and spark interest from the IRS.
So that's a great point, Debbie. And I would also always, the overarching thing with business expenses are what might be commonly referred to as write-offs. Those are expenses associated with generating revenue. So if you can draw a business nexus to it, don't be afraid to write that off. But along those lines, I think one common one is realize the work that you're doing. So if you're working virtually and the IRS sees a high number of mileage write-offs, then they might think, okay, well, this person is doing UX, DX work. Why did they need to drive 10,000 miles this past year? So.
Right. Yeah. And the IRS, especially in America, will notice these things. And I must say, if we think the IRS notices things, it's actually it's much worse, in air quotes, here in Italy. My accountant has asked me for an invoice for a $2 train ticket that I bought. And she wanted a formal invoice with my company number. And I was like, where was I supposed to get that? I bought the ticket at a machine. And she goes, no, don't buy tickets from machines. Go to the office, wait online, show them your business number, ask for a formal invoice. I was like, F word, F word, F word. Like, I don't know if I want to do all of that for a $2 train ticket. I might as well throw it in the garbage and not write it off. So, just remember, in different regions, you're going to have different proof of your income and expenses. America, I find to be a little bit more loose. Usually, if you have a more common receipt or a copy of that train ticket, usually I always have a pen with me. I'll keep a train ticket. I'll write on it what that train ticket was for. And that way, if anybody ever has a question, I've never been audited, knock whatever is wood here in my world, and knock green screen. And but if I ever were, I would be quite organized. I would have a record of everything, and I'd be able to explain how this expense related to business I was doing. And I think that's what's kept me safe over the years.
I think that's very sound advice, Debbie. And it's very important, again, business expenses should be related to generating revenue.
I love it. All right, so we should wrap up 10 minutes late. Daniel, please tell everybody how they can find you or learn more about you, or maybe ping you in case they need some of your services.
Yeah, so so again, thank you for the opportunity to be a part of this podcast and to share a little bit of advice with your clients. They've been really great and engaging. I appreciate the questions. And so if someone did have some further questions that they wanted to reach out to me, we provide small business chief financial officer services, or CFO services. So we have advisory services available, which includes executive level coaching and business development, accounting services like bookkeeping, because the better your books are, the better decisions you can make for your business. We also do tax planning and preparation, where we meet with our clients to talk about tax strategies before it's too late. And then we can also help people set up payroll. You can learn more about us by visiting my website. It's guardiancfosolutions.com. That's Guardian, CFO as in Chief Financial Officer, solutions.com, where you can book a free consultation with us and we can learn more about your business. Again, thanks for the opportunity to invest in your community, and I wish you guys all the best this year.
Thank you, thank you. And so I will stop the recording soon and just remind everybody that, thank you, Michelle, for putting the link in our Google Meet. Just remind everybody that this will go later today over to our paid Patreon members. If you are not in that club yet, you can join it for $1 a month, patreon.com/CXCC. If you are saving your dollars, I don't know, Daniel, can you write off a club membership in my world as a business expense?
100%. If you're not, the reason you're doing that, right, is to improve your skills, and you're improving your skills to generate revenue.
Wonderful. I might put it in the education category, knowing me. So, or maybe advertising, maybe education. Anyway, talk to your accountant, but join our Patreon, write it off as a business expense if appropriate for your business. And then we'll get everything up on YouTube in about 2 weeks. It is education. Thanks again. And please hold while I press the stop recording button, which is always hard to find here on Google Meet.